If you haven't filed your taxes yet, or you already filed, and you're wondering why your refund looks different this year, then you need to watch this from start to finish. Because in 2026, the average American tax refund is up by over $350 compared to last year. We're talking about an average refund of $3,521, and for some people it's even higher. New laws have changed what many people can deduct, and if you don't know about them, you could be leaving hundreds or even thousands of dollars on the table. So in this video, I'm breaking down everything: the numbers, the new deductions, who qualifies, how fast you'll get your money, and exactly what to do with that refund when it lands. First, let's talk about the big picture, because the numbers this year are genuinely impressive. As of late March 2026, the IRS has already issued over 62.9 million tax refunds. The total amount refunded is $221 billion, up from $195 billion at the same point last year. That's a 13% jump. The average refund right now is $3,521. To put that in perspective, the average refund in 2023 was just $3,004. So in 3 years, the average refund has grown by more than $500. And here's something a lot of people are missing. 72% of all returns filed this year are resulting in refunds. So why is this happening? Why are refunds bigger in 2006? The short answer is new tax law. Specifically, something called the One Big Beautiful Bill Act, which made major changes that affect the 2025 income you're filing right now in 2026. Let's go through the key deductions you need to know. First is the no tax on tips deduction. If you work in a job that receives tips, servers, bartenders, valets, delivery drivers, hairdressers, and similar jobs, this is huge. Under the new law, you may be able to deduct up to $25,000 in tip income from your taxable income. There are rules. Your tips must come from a recognized tipped occupation, they must be properly reported, and the deduction starts phasing out at higher income levels. Next is no tax on overtime. This is massive for blue-collar workers, nurses, factory workers, truck drivers, and anyone putting in overtime hours. The law allows you to deduct up to $12,500 in overtime pay from taxable income, and up to $25,000 if you're married filing jointly. Again, the overtime must be reported correctly, and there are income phase-out limits. The next big one is the enhanced deduction for seniors. If you are 65 or older, there's now an additional $6,000 deduction on top of the standard deduction you already receive. For married couples where both spouses are over 65, that could mean an extra $12,000 in deductions. Another surprising one is the car loan interest deduction. If you bought a qualifying American-made vehicle after December 31, 2024, you may be able to deduct up to $10,000 of the interest paid on that loan. The vehicle has to meet the rules, the loan must be for personal use, and the deduction also phases out at higher incomes. And even if none of those apply to you, the standard deduction itself is larger this year. For 2025, the standard deduction is $15,750 for single filers, and $31,500 for married couples filing jointly. For many people, this larger standard deduction alone is one of the main reasons refunds are bigger this year. Now let's talk about who is getting the biggest refunds. Heads of household, especially single parents and people supporting dependents, are seeing some of the highest average refunds. Married couples are also seeing major jumps, especially when both spouses work overtime or one or both are over 65. Workers in tipped professions are seeing noticeably larger refunds when they qualify for the new deduction. People in the $100,000 to $200,000 income range are also seeing larger absolute refund amounts. On the lower income side, refundable credits like the Earned Income Tax Credit can make refunds surprisingly large, even when little tax was owed. The bottom line is simple. Your refund depends on your income, filing status, deductions, credits, and how much your employer withheld during the year. And remember, a bigger refund doesn't always mean you're winning. Sometimes it simply means too much money was withheld from your paycheck all year. Now the big question everyone asks, how fast will you get your refund? If you e-file and choose direct deposit, the IRS typically sends refunds within 21 days. In fact, most refunds this year are arriving in less than 21 days. Paper checks usually take longer, sometimes 1 to 3 extra weeks. If you claimed the Earned Income Tax Credit or the Additional Child Tax Credit, the IRS legally cannot issue that refund before mid-February. To track your refund, use the IRS Where's My Refund tool on irs.gov. You'll need your Social Security number, your filing status, and the exact refund amount you expect. The tool usually updates once a day and moves through 3 stages: return received, refund approved, and refund sent. Also, don't forget the tax deadline is April 15th, 2026. If you need more time, you can file for an extension, but that gives you more time to file, not more time to pay. Now let's talk about the smartest ways to use your refund. First, build or top up your emergency fund. If you don't already have 3 to 6 months of expenses saved, this is the best place to start. Second, pay down high-interest debt. If you're carrying credit card debt, using your refund to wipe that out is one of the best guaranteed returns you can get. Third, invest it. If your emergency fund is solid and you have no high-interest debt, consider putting your refund into an IRA, index funds, or another long-term investment. Fourth, invest in your skills or side income. A course, certification, or small business idea can turn today's refund into tomorrow's bigger income. And here's what not to do. Don't waste it on impulse spending, gambling, or letting it sit in a zero-interest account for months. Treat your refund like a financial tool, not a random bonus. Now let's quickly bust a few myths. A big refund does not automatically mean you're good with taxes. Sometimes it simply means you overpaid all year. You still must report tip income. The deduction only reduces how much gets taxed. Filing an extension does not delay your payment deadline if you owe money. And many people wrongly assume they don't qualify for deductions, when the new rules may now make them eligible. Some people may still be seeing smaller refunds this year, and there are common reasons for that. Your withholding may have changed because of a raise, a new job, or a second job. You may be claiming fewer credits than before. You may have side hustle or freelance income with no withholding, or the new deductions may simply not apply to your specific situation. So, here's the full takeaway. The average 2206 tax refund is $3,521, up significantly from last year. New deductions for tips, overtime, seniors, and qualifying car loan interest are increasing refunds for millions of people. The filing deadline is April 15th, 2026. E-file with direct deposit if you want your money faster. And most importantly, use your refund strategically. Emergency fund first, debt second, investing third. Knowledge is money, and understanding how your refund works can help you keep more of what you earned. If this helped you better understand your 2026 tax refund, make sure you stay tuned for more plain English finance tips that help you make smarter money decisions.